To the market update for today, 17th of April 2022. My name is Paul B. I'm the founder of Actions to Wealth. Joining me today, three of the team are going to take you through what lays ahead potentially for the week ahead. We're going to start with the macro market update with Julian. Julian, can we come to you?
Yeah, hi folks. I better go onto video so you can see me, and welcome everybody wherever you are in the world. It's lovely to have you on board once again for a market roundup. So today I've just been in with the guys from our group, just talking about one or two things about how I see that in the world. So what I'm going to do is I'm actually going to jump to the conclusions, because unfortunately we don't have 45 minutes for me to go through them. Really what I'm looking at right now is a significant change in the way the world order is starting to work from a global macro perspective. There have been some things that have happened over the last 2 or 3 months which I think are pretty significant. Okay, the impact on the markets, let's just go through these very quickly and then we'll have a look at why one or two of these things are happening. So the euro, I am watching for, we have bullish momentum divergence. I'm watching for a change of trend. We'll go and have a look at a chart in a minute. Dollar yen, I believe that there is a good old mercantilist approach being taken by the Japanese government at the moment and the Japanese central bank to reduce the value of the yen to essentially enable them to compete more effectively with Europe at the moment in terms of global markets, and as a result of that they're going to gain market share. Better to have especially as regards Asia, a supply chain partner who is on your doorstep rather than one who is many thousands of miles away, who may at the drop of a hat change their mind about whether they want to do business or not. I'm looking at the oil markets witnessing essentially really an uptrend. There's not really been any great change within the oil market. I think $93 is a key point on WTI. Below 93, I think the market has a problem. Above it, it's still good to go for the bull market. And quite frankly, I don't think this energy journey that we're going to go on this year has been resolved. There doesn't seem to have been any resolution, certainly in the Ukrainian conflict, which is one of the key causes of the dislocation at the moment. Gold, as you know, I think we're still in a bull market. Nothing's changed. It's lower left or upper right. Still looks good for me. The stock market, I feel that we're in a sell rally rather than buy dip mode at the moment, mainly because I think the Fed has stopped caring about stocks. I think it cares about inflation. And then finally, one of the sad side effects of this is that the bond market is now not really in what I call an anti-fragile asset, so a place to go in times of trouble. The bond market is anything but, and we'll have a look at a couple of charts around that. So let's start with, let's have a quick go with the bond market. I hope you can see this. I'll just move everybody out the way for me. This is a chart of US Treasury bonds, a 30-year US Treasury bond. This is when yields are rising, prices are falling. For those of you who've been following the bond market, long-term yields have been going up quite significantly 2022. And if you look back to that, those lows we put in place back in 2020, when you expand this chart a little bit, in the 30-year sector of the market has lost over 35% in value in the course of the last 18 months. It has been carnage in the bond market. This year, that trend has accelerated. We are down over 16% in US long-term US Treasury bonds, and also bonds pretty much around the world, quite honestly, apart from one market. There's one market that has simply outperformed every other bond market in the world this year, and that's the Chinese bond market. So if you're looking for a anti-fragile bond market at the moment, then that place to go is China. Okay, so bonds is really a downtrend, guys. There's nothing to say about that in terms of price, in terms of a uptrend, in terms of yield, until it stops going up, and who knows where that's going to be. In those 30-year bonds, it could be up to 350, who knows. But normally this time of year, we tend to get those bear markets in bonds seasonally. They turn around June time, the middle of June. So it looks like we've got about another 7 weeks to go of the hassles in the bond market. And again, looking at stocks, you can see the pattern here. They've been up for a while. But look at this stuff behind me, right? When the Fed stops caring about stocks, then that's when you have to sell rallies, because we're going through what I believe to be that subtle and overt warning period here. I think trouble ahead. That doesn't mean to say the market's going to go down or go down substantially. I just think it's going to go sideways. For me, the low probability option is for the market to trade up. I think the reasonable probability is flat to down for the next few months. We'll see how that unfolds. Apologies, going the wrong direction. Precious metals. This is a chart of gold. This is a weekly chart. what is there to say? It's lower left to upper right. It's still bullish. Just one quick thing to say on this. When you look at the 90-year and 60-year cycles, the guys at Gang Global have done some great work on this. They're calling the precious metals a lot higher. What does 700% on $1,900 do to the gold market? That puts it at what? 12,000, 14,000? Okay, I know that sounds completely crazy, but there's nothing these days which is normal. So just bear that in mind. I think there's some opportunities still in precious metals. Still love them and love them to bits. Okay, so that's gold, and again, just moving on to oil. There'll be other people who have more to say about oil, but look, again, for me, 93 is a pretty key level. Above that, it looks fine. Below that, I've got issues, but until that point in time, again, it's lower left to upper right. Okay, this is a bull market. Look at this. It's been going on now for over 2 years. Has the energy, and this is the question you've got to ask yourself, has the energy situation around the world resolved itself? Has anything about energy resolved itself? And the answer to that I've got is I don't see the price of coal coming down. I don't see the price of oil coming down. I don't see the price of natural gas coming down. In fact, if anything, it's going up. So pretty much right now, we're looking at bull markets and all of the energy stocks as well as oil. Okay, what is going to turn this around? And maybe a resolution in Ukraine, who knows? But right now, the trend is up. You just got to trade it that way, right? And I think that's the pretty critical thing. One other thing I just wanted to say around currencies, right? We go look at the euro in 2 seconds. The press around the UK has been absolutely appalling for the last 6 months. Everybody, I think, pretty much universally dislikes Boris Johnson and his politics and his policies and his cavalier attitude to the British public. Now, that may or may not be something that will last for some period of time. Who knows? But what's really important is the major trading pair, the major trading currency pair. Look at where euro sterling is. It's on its knees, right? It's on the lows. What does this mean? It means that sterling is doing the best it's done for 2 years. So there's all this talk about the disaster unfolding in the UK, but look at what's actually going on in price terms. What's going on is the market is telling you everything is fine. In fact, it's more than fine. The market is telling you that overall it loves sterling. So just bear that in mind. Okay, so look past the rhetoric, look at the prices, look what's happening. Okay, look, there'll be other people talking about dollar yen. I'm not even going to cover it. You know, you can see the charts as well as I do. It's the topic du jour at the moment. Okay, the key thing for me, and we've spoken about the mercantilist idea, right? So that for me is the absolute underlying trend that is happening right now in the dollar yen. Other people can talk about the short-term technicals. What I'm seeing here on the euro, when we look at the euro, right, what I'm seeing here is a bullish momentum divergence. So again, everybody hates the euro. Well, maybe people ought to read Lagarde's speech on Thursday. She seems to be one of the few central bankers in the world that absolutely gets it at the moment. Certainly gets it compared to the Fed. The Fed seem to be in some kind of hubris world that I still don't quite understand. They talk about interest rate rises, they talk about changing things. All of a sudden, the market responds. They feel very pleased with themselves. But oh my God, do you really want to be doing tightening and interest rate rises at the same time in the States? At the same time as potentially the economy starts to turn down? I don't think so. And in fact, quite frankly, I think the Americans have the Fed. This is the worst Fed that I've seen for the last 20 years. So I think Lagarde, my opinions about her wax and wane from time to time. Right now, I think she's nailed it. I think a steady as you go approach is really pretty critical. And quite frankly, Europe needs it because Europe's in trouble, right? They need somebody at the wheel that absolutely understands what's going on. I think Lagarde gets it. So when I see a bullish momentum divergence developing in the euro, together with potentially political and economic rationales for a rally, you can imagine what will happen, and probably the market will see the end of the Ukrainian conflict before the conflict itself sees it. Okay, that's one of the key things to bear in mind. Watch this, right? Because the euro to me is an opportunity here. So I grant you the trend is still down. You start to see price action that supports an uptrend. I think you need to be thinking very carefully about that. We have bullish momentum divergence taking place. Doesn't always win, but 9 times out of 10 it does. Paul, that's it from me. I think I probably said way too much already. So I hope that gives everybody a roundabout view about what I've been talking about for the last hour. I went into that in a bit more detail and over that. And for the members of the team of Actions to Wealth, they get the opportunity to see that. So guys, thank you very much for listening.
Cheers, Julian. Thank you very much for that. And thank you for your earlier session. I understand there was a few issues with that, and we'll have a recording up for that reasonably soon. So thank you very much for both sessions on a Sunday afternoon here in chilly old New Zealand. Next thing we've got is trend trading. Obviously, being able to spot and trade trends is a huge part of the keys to becoming a successful trader. Leka, what are you looking at as far as trends this week?
Hi, Paul. Thanks. I'm just going to share my screen. All right. First of all, I'm going to be looking at Euro GBP. At the moment, we've had that coming down just past this support level at 0.83. It has closed below. So I'm now looking at potentially having that bounce off that support and create resistance and come back further down. Looking at potentially the previous lows there, which is also the bottom of the channel. And yeah, that's sort of the what I'm looking at next week or two. And also I'm looking at GBP JPY. That's been now going up for a while since breaking out of that range. So there were a couple of good trades, long trades there. So in terms of daily, still going up. So still looking at any pullbacks and taking long positions on GBP JPY. That's all from me today. Thank you. You're on mute, Paul. Paul, you're still on mute.
Cheers, Leka. Thank you very much. Interesting charts. It's nice to see a little bit of trend still hanging around in the market at this point. Next, I'm going to have play the video from Orlando. Orlando's going to talk about the US dollar and to see he is in El Salvador, a long time of night for him to be live with us. I'll play his video next. Am I ready to go with the video for Orlando?
Hello traders, Trader O here, and we're going to talk about the US dollar, right? I'm continuing to be very, very bullish on the USD, and I'm going to start from the very, very high time frames, the monthly, and I'm going to come back down in time frames, well, to show you my thought process on where I'm looking for buys, right? So this is the monthly chart on the DXY. DXY is, of course, the US dollar currency index, I'm sorry. And what I'm thinking about this breakout on the monthly, this is the monthly candle, right? April's monthly candle. This hasn't closed yet, right? But what I'm thinking about this is the continuation above September 2019 highs, right? Now, should the DXY or the US dollar remain bullish as we are seeing, or as we have been trading it from these lows around May 2021, it's pretty cool because we're going to have a nice 3% range to make money or to profit from longs on the USD from September 2019 highs, targeting, of course, on the midterm March 2020 highs. But the cool thing about this chart is this, that I'm also looking further continuation to the upside. Remember that we are seeing more and more hawkish language out of the Federal Reserve. Hike rates are coming this year, etc. This is very, very bullish for the currency. And of course, we have, but technically speaking, we do have some very strong to the upside. Now, first target will be March 2020 highs, of course, in confluence with these highs, which are October 2016 highs. And then we do have this massive key level, which are May 1989 highs and this space. I'm looking at the higher time frames because I am looking for long-term longs on the USD. Now, if we go to the 12-hour chart, right? This is the 12-hour chart on DXY. We are looking at a very, very nice bullish structure. And as you can see, September 2019 highs are also March highs, right? Um, this candle, well, price broke with this massive level. Now, buyers were unable to break all throughout March with the 19,936 level, give or take, right? Um, but eventually we broke to the upside, right? This is not a level that I wish that I would look for buys on the USD. Now, what I'm looking for is a retest of these highs, right? Of September 2019 highs, which are also March 2022 highs. Now, what I'm looking at here, technically speaking, on the 4-hour chart is this massive push to the upside. Remember that support and resistance um, zones are actually zones, not straight lines. So I could have missed the boat on this move. Now, it doesn't matter, right? If we go back to the 12-hour chart, this structure is a very, very clean. So we could, in fact, have a push to the upside to retest this structure, right? Before I could look for deep buys on the USD. Now, what would happen if the DXY breaks with this with the September 2019 highs? Would I turn bearish on the US dollar? Hell no. Of course not. Of course, I would not turn bearish on the USD. Now, my next buy zone, and to be completely and utterly honest with you, this is my preferred buy zone on the USD, looking, of course, at price action on the DXY. Why? Because, yeah, I mean, this is a massive, massive level on the very high time frames. And, on the lower time frames immediately, which are March, last month's highs, but still, I see it a little bit overextended, and I do not like the risk parameters that this possible position would yield. Why? Because, of course, I mean, if the DXY comes back down and rejects this level, I am not going to look for very tight stops because I would definitely get stopped out. And if you notice here on the last move up, there's very few, or actually none, pullbacks, deep pullbacks to look for lows to place stop losses. Of course, I wouldn't trade the DXY per se, but big moves on the US dollar would yield the same moves on the markets that I trade the US dollar on. So my preferred level for buys on the US dollar is actually the 97.80 level or February 2022 highs, which would yield a nice pullback and possible retest of the bottom of this structure, right? This structure has been also very clean in the past, so this is my preferred level for buys. For the first days of next week, I am really not looking for US dollar trades. I'm just going to be watching price action and see, where it lands or if one of my plays actually plays out. The cool thing about deep pullback also towards February highs and January highs is that this is my actual bull bear zone on the short term. Well, not short term, mid term on the DXY on the US dollar. And I see possible big buy orders placed here, right? This is a very tight no trade range, and bull bear zone, in the sense that if the DXY breaks with this level, there is clean room for further downside continuation, in the sense that I don't see buyers jumping in after the break of the structure and this massive level, big orders placed here. I would be looking for buys all the way down here, but that scenario is far-fetched, right? So, my advice just to stay patient. This is clearly overextended. And a dip towards the 99.40 level, or September 2019 highs, or last month's highs, right, is risky, uh, in my opinion. So if I definitely see a rejection here, I would trade alongside on the US dollar, but I would aggressively manage that trade because I would still be considering a possible pullback towards this level, which is where I consider big orders uh, to be placed in. I'm sorry that this video came out a little longer than expected, but I believe that should the second scenario play out, we would be looking at a very, very, very nice dip buys on the USD for possible swing trades, which will yield a massive profit. So trade safe, be patient, and I'll see you around.
Thanks for that, Orlando, and thanks, Julian and Leka, for joining us today. And most importantly, thank you guys for joining us. I hope you've got some valuable information as we head into a new trading week. As always, stay calm and make good decisions, and everything does work out. And in the end, it's an interesting market. As long as we have got conflict, we always have opportunity in markets, and there will continue to be opportunities for some time. So thanks for joining us today. Thank you, Leka. Thanks, Jules. Thanks, Orlando. And we will see you guys next Sunday, same time, for another market update. Thank you.